16 minutes till we wind down. For the time being, let's get in Neeraj Deewan, Director at Quantum Securities, who joins in. Hi, Neeraj. Good afternoon. Thanks so much for joining in. Well, Mitesh technically is saying that some of these pharma stocks are looking good for more. I'm just trying to see a couple of stocks that have done well in the last 1 hour. You have AMI Organics. That stock has spiked up, moved to the high point of the day as we speak. Let's get the intraday chart out there. Neeraj, by any chance, do you track this one, AMI Organics, AMI Organics?
Yeah, good afternoon. No, I don't track AMI Organics,
okay.
The pharma stock. No.
All right. What about these pharma stocks? You know, some of them are coming out after a multi-month, some of them multi-year underperformance actually. You have Divi's that's up. I think it's bounced closer from its 52-week lows. Strides as well has been a big value destructing stock actually in the last few years. Any of these stocks will you look to buy into?
I think Divi's is one stock where, you even getting some sense that, again, their businesses which they were earlier focused on totally on COVID, now they're coming back to therapeutics and their traditional stuff that they were doing before. I think the consolidation that we saw in the business and the stock price, I think should be over for the time being. So today, I think today COVID fear that that is coming again, or the talk about COVID. So this move may be associated to that, but even if you keep that aside, I think we've seen a consolidation and the businesses over the next 2-3 quarters should start again the growth perspective, and a movement should happen there. And especially on this healthcare pharma, I would say that I would go for something like a Fortis Hospital maybe, because what you need to see today is that you need to get into a stock where the valuation is also attractive. So valuation wise also that is decently placed. So whether it's the movement is happening right now because of COVID, or whether it's not because of COVID also, the stock generally should do well because we've seen the profitability and the margins improving, and valuation remains under check because of whatever is happening with the takeover and the new management. So I think that is why it's still available at a decent valuation.
Okay. Neeraj, COVID or no COVID, right? I mean, if this market dips, it's a great opportunity for long-term investors to perhaps buy those stocks that they didn't get in the rally. So if you look at the big performers this year, there are names like M&M, Axis Bank, SBI, Adani Enterprises, of course, big move over there. Would you buy any of the gainers of 2023 in the dip, gainers of 2022 in the dip if it comes about?
Yeah, absolutely. We need to right now keep to our strategy of the stock which have been doing well and the investment theme which have been doing well. One big name that you mentioned is Mahindra & Mahindra. So in auto, this is done very well, and plus even now you don't find it at a very absurd valuation. Valuation is still very attractive looking at the return ratios. So I think for investment, Mahindra & Mahindra would be in that category. And there are other themes which played very well this year. There's a defense theme where so much is happening in the defense. So many orders are coming. Order books are huge, and so much is going to be spent. Make in India, what is happening. So that will continue doing well. So if you get these stocks in this dip, I think defense would be another good pick there. And even in the financial, I think right now maybe you can see what kind of dip happens. This correction which is happening generally because of market being at a high level, because of market being overbought, and because of this COVID talk. So you may get some corrections there also. So you right now look at the stronger stocks, whether it's HDFC, ICICI Bank or State Bank, and there if you get some opportunities because of this dip, even that's a good theme one should look at. Because and then the fourth thing would be infrastructure capital good, where we saw the capex is picking up. So infrastructure capital good is one space where I think there are opportunities, and with this correction, I think you can look at opportunities there also.
Right. Neeraj, you spoke about auto, and one of the stocks which can be considered a quasi auto ancillary is Kansai Nerolac. It's up 4% right now. In fact, in an otherwise very weak, wobbly market, especially for the broader markets, Kansai Nerolac, the intraday chart comes up for you up around 4%, and with huge volumes as well, 2 times what we've seen on an average on this counter. But something's off, because not all other paint companies are moving as well, but this may have some sort of valuation support, and if the auto cycle turns and we get greater demand, people will look at this. Your thoughts on this one if you track it?
Yeah, actually, there are two things like you mentioned about autos. If the demand continues and the numbers are supportive, and there's no dip which comes because of some COVID scare which can come or which may or may not come, it's too early to say. But valuation wise, also this as compared to others, this is a little better placed, and plus autos valuation and crude prices. So crude prices also hovering around 80, and there's a chance that they may come down from these levels. So all these things are supportive, and so Kenza Nerolac, there I think it has these two, three factors which may support it over the medium term.
Neeraj, give us a sense about a couple of these other names, the real estate stocks. Now, there is talk that maybe there'll be some money that will shift from equities to fixed income, maybe another asset class like real estate as well. What's your sense? I wanted first, what's your take on that? And if you had to play it via the stock market, then would you play it via the listed names, the housing finance names, or the ancillary companies, the pipes, the cement names?
I think I would go with the ancillary names right now. See, real estate, we saw a good move. See, I'm from North, I'm from Delhi, so I can talk about the Delhi market. We saw a good move happening in places like Gurgaon, which is developing, real developing place where the prices really went up, shot up a lot. But now lately we've seen that there's some stagnation which has happened after the prices which become very expensive. So there may be some small softness or a consolidation there. I'm not saying it is over for them. I think after the consolidation again, real estate should do very well. But because this initial move that we saw, interest rates going up, and some stabilization happening in the prices. So, auto ancillary, the ancillary names like you mentioned, cement, and other, companies like whether it's the tile manufacturer or the other home improvement companies, there, there was this margin pressure which was coming because of high commodity prices. So, which may ease, even for cement companies, the logistic prices come down. So, logistics, the raw material pressure will come down for these companies. So there you may see margin improvement happening this quarter and next quarter. So I would rather go with those kind of companies.
Okay, thanks a lot, Neeraj, for joining in, and Happy New Year to you and your team. In case we don't meet again, have a great Christmas and New Year. And
thank you so much.
Hopefully we'll speak in 2023. Thanks for joining in. Well, after delivering healthy profits